Hi, welcome to my channel. We're starting a new video of economics subject. This is the first video of that section, Introduction to Economics. Let's start with economics. What is economics? What are types of things we study in economics? Economics is a social science. It's not a science. It's not exact as a science like mathematics or physics. It's a social science which tries to study economic choices that is made by individuals like us, business firms, governments, and the society as a whole. Economic choices, the study of economic choices is related more or less to scarcity and the incentives that are associated with scarcity, the choices we make, the better choices that we can make given that resources are scarce, and how individuals like us, business managers, government agencies can coordinate to maximize the scarce resources. It's a vast study. The scope of economics is very vast. But let's start with scarcity. That's the fundamental study of economics. Scarcity is the inability of us, everyone, us means everyone, to satisfy all the wants given the resources are scarce. For example, take you or me. We have income or pocket money which is limited. We cannot buy all the things we want, but we can rationalize these resources, this money, to buy the base things that we can. So scarcity arises because the resources we have are severely limited. The limitation, the scarcity, the limitation is because we have less time, less incomes, and the prices might be higher than what is expected by us. Scarcity arises because the things we want, our collective want, exceeds our total resources. For example, I have $50,000. I can either go for buying a house by depositing a sum. I can buy a luxury vehicle. I can buy as many things I want. But the maximum amount I have is $50,000. I can only buy a house or something which is worth 50,000. I cannot buy all the things I want. I cannot buy all the things that is available to me because I don't have all the money in the world. So because we have resources that are scarce, we have to make choices between different alternatives. For example, a student has limited amount of money. Either he can buy a song album, CD, or a good book which he can study for MBA or BBA. He has to make a choice because he has scarce amount of money. He doesn't have enough money to buy all the songs he wants or buy an unlimited Spotify subscription, or he can buy a book, good economics book. Take for example Brad Pitt. You might think that Brad Pitt or Jennifer Aniston or Sylvester Stallone or Scarlett Johansson, they might have not the problem of scarcity. But no, these movie stars also have problems of scarcity. Brad Pitt, for example, has been offered with 3 movies or 4 movies to do in a year, but he cannot do all. He has to allocate his time, which is limited. So he can either do one in a given year or 2, not 4. The government also must make choices. It can either spend the revenue it generates on defense programs, on missiles, on defense equipments like guns, aircrafts, or it can reduce the tax burden on the population. It can also spend the same money that is required to be spent on defense, unnecessary expenditures, on increasing school facilities, increasing student scholarships. So government doesn't have enough resources to do all the things. It has to also face scarcity, and it has to undertake the problem of choices, choosing between alternatives. A society also has scarce resources on the whole. Either it has to choose healthcare, or it can spend some money on environment, it can spend money on education, but not all the facilities can be done fully at one point of time, because on the whole the country, the society, the world had scarce resources. Wants, desires are more than what we have. So we cannot satisfy all our wants at the same time, and we'd have to make rational choices. So scarcity is the basic problem which is to be dealt with economics. Economics broadly can be divided into two parts, although economics are of numerous types, but basically either we study microeconomics or macroeconomics. Microeconomics is economics being studied on a micro level, small, very small, right? Very small. Macro, on the other hand, is like a big scale. Microeconomics studies the choices that individuals or individual businesses make. For example, either I have the money to buy a laptop or a phone, smartphone. So this is a choice made by an individual. What consumers buy is individualistic in nature. What price a consumer must pay for a phone, smartphone, or a laptop, or a garment, it's studied in microeconomics. The demand, supply. Business firms also deals in choices like what it should make, how much it should make, for whom it should make. On the other hand, macroeconomics is the study of the aggregate amounts, total demand, aggregate demand, national income, gross domestic product, net national product, gross national product, employment, unemployment, taxation. So macroeconomics is the study of the economics and the economy on the whole. What kind of decisions government make is studied in macro, not in micro. Microeconomics is all about small farms, individuals, what they make, what they buy, and how pricing is done through demand and supply. Macroeconomics is much bigger in scale. On the whole, it deals with aggregate of everything. Fundamental questions which are dealt in economic study are of three types. How to produce, what to produce, for whom to produce. How to produce, whether you should use more machines, or you should use more manpower. A country like India has large population. It has huge labor force, as do China. So in a country like China, production would be generally be done through more usage of labor and lesser degree of machinery, but they will be combined. But in an economy like United States, UK, where population is very small, Italy, France, they would like to employ more of plant and machinery, more of automated plants, and less of labor. Countries like United Arab Emirates, they have very limited amount of labor force because their population is very lower. So they don't have enough employable labor force to produce. They have to bring in labor force from outside. So these economies, smaller economies with higher capital, higher money, bigger economies, they don't produce with more labor. They produce with more machines, more automated plants. The second question is what to produce. Whether you should produce luxury goods or you should produce necessities. A country like San Marino, Luxembourg, Switzerland, Japan, Norway, their per capita income is very high. United States, Qatar, their per capita income is in excess of $45,000 per annum. As compared to that, there are large number of economies like India, Pakistan, whose per capita income is less than 2,200 something. So these economies with having large amount of per capita income would like to produce luxury and higher priced items, whereas the economies whose per capita income is very low or on the low side, medium scale, they would like to produce more of necessary items, necessity goods, lifestyle goods than luxury goods. For whom to produce? Whether you should produce for the consumers, should produce for the government, you should produce for exports. So the producer in an economy has to decide for whom to produce. Let's go to the next slide to discuss these elements, these fundamental questions. Like I have already told that if there is scarcity, you have to make a choice. Choice between alternatives. So the choice is a trade-off between alternatives. Alternative A, alternative B. You cannot have both A and B. So you must choose either A or B. So we must select from available alternatives. So the choice is a trade-off between alternative A and alternative B. These economic choices we make are rational. It is believed by economists that people, individual business managers, while making the choices, behave in a rational manner. A rational manner is defined as making the best use of the available resources. Best use of the available resources. A student has $40 in pocket. He wants to go to a movie. The movie ticket will cost $20 and further entertainment might cost $10. Transporting to and fro from the movie hall, cinema hall, will cost another 5. So by the end of seeing the movie, there will be only 5 rupees, $5 left. 35 will be spent. But if he's smart enough, he also recognizes an alternative B. He can buy a good book. He can buy a good CD for studying economics, accounting, statistics, etc. So the rational choice is to make the best use of the resource and buy the book, buy the educational CD. For the student, going to the movie and not buying the book or CD will be very bad. So this gives rise to the concept of what must you give up. What you must give up is known as the opportunity cost. If you go to the movie, then you cannot buy the book. So you have a choice. If you go to the movie, then book is lost. You give up the book. The opportunity cost of going to the movie is the book. So you, in that case, understands that going to the movie is the best alternative and buying the book is the next best alternative. Giving up the next best alternative is the opportunity cost. In this aspect, we must also understand the marginal cost and marginal benefits because most of the choices involve marginal cost and marginal benefits. Marginal cost is that cost which increases as a result of increasing 1 unit more of the consumption. For example, suppose say you have gone to a restaurant, you usually buy 2 coffee, 2 coffees for $10. But in a particular day, you want to consume 3 coffee bottles or 3 units of coffee. It will cost you $13. So the marginal cost of the additional unit, 1 unit, is $3. 13 minus 10. So 1 unit of more consumption, additional unit of 1 consumption will pay you back by $3. $3 will be spent. The marginal cost for any activity increases. So the marginal cost, total cost increases and marginal cost is 3. Similarly, for 2 coffee bottles consumption daily, for example, you think you derive 30 units of satisfaction, which is worth $30. When you consume 3 coffee units, you derive 50 units, 40 units of satisfaction, worth $40. So what is the additional benefit? It is 10, worth $10. What is the additional consumption? Only 1, as we have seen here. So what is your marginal benefit? Benefit from consuming 1 more unit is $10, which is equal to 10 units of satisfaction. And what is the marginal cost of the third unit? It is only 3. So there is marginal cost, marginal benefit is greater than marginal cost. So you can see we're deriving 10 units of marginal benefit for consuming 3 units of marginal cost. So if you consume one more additional unit than usual, you are paying 3, but you are assuming a benefit of 10. So your excess benefit from consumption of third unit is 7 units. $7 worth benefit. Fine. So it says that marginal cost is generally less than marginal benefit. So what we have seen is marginal benefit of the third unit is greater than marginal cost. So marginal cost is lower. You would decide to consume the third unit, and that choice is a rational choice. It is natural. You think that you are deriving 10 units of benefits by consuming 3 units worth goods. So you are deriving additional benefits of 7. So that is a rational choice. But what happens if marginal cost is 10 and marginal benefit is 3? Marginal cost is 10. Just reverse the situation. You have to pay 10 units for consuming benefits worth 3. Your marginal benefit increasing by only 3. So you are in a worse position. Your total benefit decreases by 7. So marginal cost here exceeds marginal benefit. You are not making a rational choice if you are going for third unit consumption because the marginal cost is greater than marginal benefit. So no consumption here, no additional consumption. You understand the point? If marginal cost exceeds marginal benefit, no one would undertake additional consumption. However, if marginal benefit is equal to marginal cost or marginal benefit is greater than marginal cost, it is a rational choice. Additional consumption makes sense. This happens in general life, day-to-day life. Either you consume when marginal cost is less than marginal benefit, or at least it is equal to marginal benefit. Fine. So rational choice means best possible use of the available resources. Now moving to incentives. You consume only when there is some incentive in taking the choice. The choice, like what I've told you, that marginal benefit of the third unit is 10. Marginal cost of the third unit is 3. So what is the incentive for you? You are rewarded with 7 additional units of incentives. So you take a rational decision to use it or consume it. So incentive is a reward here. It encourages consumption. If the reverse happens, marginal benefit is 3 and marginal consumption is 10, your incentive for consuming an additional unit is 7. You are discouraged. No consumption is undertaken because you are penalized. So there are two situations. Incentive is reward when marginal benefit exceeds marginal consumption. Incentive is a penalty which discourages actions when marginal benefit is lower than marginal cost. So as decision makers, the individuals will be asked and required or expected to make choices, go for choices by observing the changes in alternatives and changes in incentives. If the value of the incentive is a reward that is positive, it is a rational choice. If the value of incentive is negative, it is not a rational choice. It is a rational choice. A rational choice is always expected in economics. We're coming back to the three fundamental questions. What do you produce? Consumption goods, goods and services which are used by individuals, capital goods, long-term goods, fixed assets which will be used by businesses to increase production in the future. Government goods and services, these goods and services are utilized by the government, bought by the government. And fourth is export of goods and services. These goods and services are produced for export purpose only by an economy. So we produce four types of goods. So when we call what to produce, we need to look at these four things. What to produce. How do you produce? प्रोडक्शन कैसे करना है? As I said, if an economy is blessed with lots of resources, lots of money is available, lot of resources are available, resources are less scarce, then that means it has lots of factors which it can use automated plants to produce. If an economy has less amount of capital available, less amount of money available, less amount of technology available, it will go for a labor intensive produce. But in production we have four types of factors of production. They are assisting in production. The first thing is land. Land is virtually the land which is available with you, with your economy, with your country. Minerals in that land, energy available, water and air, and wild plants. Labor is the people, individuals who are ready to work for wage. Capital is the money or long-term goods that is available with the economy, like machines, buildings, tools, equipments, motor vehicles, all sorts of those things which can be used for production for a long period of time. And lastly, but very important, entrepreneurship. You might have capital, but if you don't have entrepreneurs who take the risk of organizing land, labor and capital, then you will not have productive resources. Resources will be wasted. So entrepreneur is like a proprietor who arranges all the above three things, land, labor and capital, and starts produce. So entrepreneurship is that kind of human resource which organizes land, labor and capital to start producing. So with the help of all these four things, an economy is able to produce. Whom do you produce? We produce generally for individuals, households, for government, for export. But generally we produce for people, individuals who work as labor. So they derive the earnings by working in the industries. Those who own the land, they are paid rent. So those individuals who has land, they are paid rent. So we produce for them as well. They earn their income in the form of resources. Those who work as laborers are paid wages. Those who have capital are paid interest. That is their earnings. The entrepreneur, the proprietor is paid the profit. So we produce for these people. They earn from the industries and they use their incomes to buy the goods back from the industries. Thank you very much. This is the fundamental part 1 video, ELV1. Hopefully by listening to this, by tending to the points discussed, you'll be able to understand the very basics of the economic subject. We'll come back with a new perspective, new video in the next session in a very few days. And till then, kindly subscribe to the channel. You can also use the WhatsApp or email ID given to be in contact in case you need more of the same resources, notes in Microsoft Word, etc. Thank you very much. Please subscribe to the channel till the time we bring a new video. Bye bye. Thank you so much.